Hey everyone, welcome back to CryptoCache. Thanks again so much for joining me here. Hope you're having a fantastic day. Holy cow, what a weekend, huh? Boy, I'm glad I take weekends off in most cases. That was a show yesterday, for lack of better terms. We want to take a look here, of course, at the macro, what's going on in the big picture. There's actually some really cool stuff. We'll discuss the potential for pivot and bounce off this 50K mark. There's a decent chance that's the lowest price we'll see, but we're going to look at liquidation and double check a few other factors. We're going to also look at the macro on a different chart and kind of just help understand big picture best practice for scenarios like this. Okay, so if you are new to the channel, welcome aboard. Hope you can learn something today. If you've been watching for a while, thank you again so much for the continued support. Do not forget to hit the like button, comment below if you get a chance. Let's go and refresh this page here just so we got some fresh current here for us and kind of see what's going on. So the easy way to understand it is this was a fundamental catalyst. There's, the Asian market is taking a pretty big hit right now and is factoring in here as well. I think specifically Japan. So again, all fundamentals aside, a lot of liquidation events occurred. We got some late longs and of course, any potential liquidation event between 52 and 54K has been fully swept. There's a very small amount at about 46 to 47K, also a possibility. I have limit orders set all the way back down there after my low limit orders have already gotten filled. I was surprised to have gotten filled at 50,000. Honestly, that was just a shocker. But if it goes any lower, well, I'm going to be ready for it. And I hope you do too as well. Because again, when it comes to buying the dips, it's important to recognize that Bitcoin probably won't be back in the 50K range ever again once we break through our all-time highs. Again, it just depends on how you look at it. There's always some kind of correction that can occur, but generally speaking, most all liquidation has been swept. And just to clarify, there are some late longs here at the, just say between 48 and 50K, which seems pretty safe at this point. However, it's hard to kind of get that. I basically woke up and that had already happened, so there was no way for me to have taken a signal. And truth is, I probably wouldn't have sent a long position here to my community or anyways, just haven't taken one because it doesn't make a ton of sense to, buy the dip with high leverage, okay? Again, you got a few dollars here and there you want to kind of throw at it, see how it works. That's a different story altogether. But again, just know it's basically gambling when you're trading right now. The main reason why is because there's too many things going on right now. You got to let the charts kind of calm down and relax. So if you're trading right now, it's okay. Don't get me wrong. I'm not going to diss you for that. But I can tell you that it's not responsible to take, to say high leverage trades or just to do some super risky stuff right now. If you do have high risk, just keep the amount that you're risking low, right? And just continue to add to your spot bag as the price comes down lower. If it does, we'll double check a few things here. So for transparency's sake here, just to give you a perspective, based on the overall trends here, generally speaking, when you draw out some Elliott wave patterns here, the first wave is usually just the first impulse. Second wave up, basically is the largest one. Okay, so generally speaking, we're going to see the most amount of continuation in the second swing up. The third swing will likely break the all-time highs there at about 74K, but it's important to recognize that 0.5, 0.6, and 8, these are the two areas that are commonly retraced to and bounced off of in this impulse wave. Okay, so which is why I have the fibs drawn out here instead of the more local, because we're just kind of get some macro perspective here again. Okay, so let's take a look at this different chart and go ahead and start with the monthly, and let's work our way down. So on the monthly time frame, we're still above all moving averages, of course. We have been for some time. That's not going to change for a while unless we continue to progress lower, which I still see as a distinct improbability at this point. However, if we take a look here, of course, at some of the moving averages and everything, stochastic swinging down, RSI is coming back down, money flowing away from the coin. There's a lot of reasons why we're seeing this divergence here. Okay, now again, the monthly doesn't tell us a tremendous amount. It just kind of foreshadows the fact that we are losing momentum. And until we kind of like swing back up on the MACD or have some kind of convergence here, we're still going to continue to progress lower. So this basically tells us we could continue lower, but we're still in the overall sense more bullish on the macro. And I know it seems weird. How the hell are we bullish when we just saw a 10 to 20% correction on a weekend? That is nonsense. That is crazy. We were at 70,000 just a few days ago. However, we're above 50 in the RSI here on the monthly, letting us know that we're still in decent shape and that we haven't fully diverged yet. Stochastic tends to swing up and down, give us false positives there, generally speaking, but the truth is the momentum is heading down, but we have a lot of support below us, okay? Looking at the weekly, okay, now this is where things get a little more interesting. We can see the 50-day SMA hanging out right there at about 50,000. I'm using a round number, but just say 50 to 51K is that level. that's where we can see a pretty strong Fibonacci retracement area, as well as the price action wicking down and bouncing off that range. Okay, now again, it's not an exact science. The price didn't hold because of that, but it's still something to note that we're above that level and we're still in good shape. Until we close below, I don't think we have anything to worry about too much. Okay, and again, the way that trading has been going lately, as soon as we close below a key level support and people flip bearish, that's when they shoot it back up at you, right? The volatility has been out of this world lately. So please, 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 if you're going to be trading, just again, use proper risk tolerance. Use good risk management. Don't risk too much. It doesn't make a ton of sense right now. This isn't a get rich quick thing, okay? I know you see some examples of people who have done that, and that's okay. That's still a possibility, but it's not a probability. All right, so play the cards right. If you want to make this, a go at this and do this full time, well, maybe watch my university videos if you're part of our community. But more importantly, just learn, become a child of knowledge, and eventually you'll get there. But you really got to control this if you're going to control that or that. All right, so taking a look here at this is the weekly still. We are under 50 on the RSI, so this is generally unfavorable, right? But if you take a look at last time, we dipped down below, we closed below right here, and the price was like, screw you, we're going right back up. Okay, and that's just generally how bull flags play out. There's also a lot of talk in my community about a descending broadening wedge, which if this is one, which you could kind of say that it is, right? You can kind of adjust it accordingly. It is a bullish type of pattern. However, we got to recognize too as well that they are commonly bearish, is also depending on the direction they're heading. And usually a situation like this, it could lead to the price pulling back a little further. So try not to attach yourself too much to a specific pattern, but the general consensus here is that we are in a natural corrective range. And this isn't too crazy. While we wicked down, we have a good distinct probability of closing above that 52.5 mark. So I would say until we close below the 50-day SMA on the weekly, we don't really have too much to concern ourselves with. However, stochastic is swinging down, being under 50 on the RSI. Those are generally unfavorable. So we can recognize that the momentum is shifting just because it was such a large, candle. In fact, truth be told, this was the worst week that we've had from top to bottom, about an 18.5% correction in 1 week since FTX. Okay, so FTX was the last time that we saw that. It's right here, this November 22nd, or November 22. That was about a 25% week. So that was the absolute worst week we've seen since then. Now, again, you could argue that a few weeks ago we saw something similar. Yeah, it was close, but still wasn't quite as bad. All right, so anyways, now that we understand all that, let's just go to the basics here and work our way down. Daily time frame, we're under all moving averages. We're getting closer to, we've surpassed 30 on the RSI, which is generally a place in which you see a bounce. Now that we've broken through that, we may not see that at all. However, today's candlestick hasn't closed yet, so it's too early to presume. But generally speaking, if you break below 30, you want to wait for the RSI to come back up before you consider taking a trade with any kind of confidence. Now, again, if you take a trade right now, there is no confidence. It's just literally just a buy and a dip, really. It's all there is to it. There's no benefit of buying that, minus just the price being overextended and everything's kind of cooling off right now. Generally, the best practice when situations like this occur, even though there's tons of opportunity that we're missing, is to avoid it altogether and to not trade and be the best trader you can be by sitting on the sidelines. So me personally, when this stuff happens, I just look at it as opportunity to take a brief little sabbatical, right? Go for a walk, take a break. Don't need to overtrade. There's no reason to even trade into this because it's just kind of a big mess, right? So just some friendly advice if you're considering trading this. I get it. It's nothing wrong with having done that or doing it. It just makes very little sense from a macro perspective here, unless you're adding to your spot bag and you're maybe using really small leverage is one thing, but if you're using high leverage and a large position size, it doesn't make any sense. You're basically just gambling your money away. You might get lucky, but if you get lucky now, you're going to think that that's the way that it always works, and eventually it's going to bite you in the ass, and you just don't want that, okay? That's how a gambler's mentality works. Go to a casino and sit there and watch people and see how it works. You'll get a quick understanding of the correlation between that and this, and the distinct probability of being successful is very low if you manage your portfolio as if you're gambling, right? It makes no sense, again. Easy come, easy go. All right, so let's take a quick look here at the 4-hour time frame and just recognize that we're back up over 30 on the RSI. This is generally a sign to have closed your short position and or consider a long. Now, again, this is not an exact science. Everything else is screaming macro. The macro is pretty much screaming a bearish divergence here, obviously minus some of the other outliers, but the general consensus here is to not really go crazy with longs. However, this natural knee-jerk reaction that's happening as a result of bottoming out tentatively is causing us to do that. So at this point here, it would make sense to consider taking a long position versus taking a short. Now we're going to look at some key fib levels here. In fact, let's do that right now. These are macro fibs based on this larger impulse wave. And if we can kind of see this, 0.382 is 55,100. We can presume this range that we're in right now will be a resistance based on more local lows here, essentially wicking into this range of 53.2 upwards of 55K. So there's a strong likelihood we're going to probably work within the range here for a short while and either break up or break down. Okay, but it would make sense for the price to break up considering how much it's come down, if that makes any sense. So the overall sense here is that we don't have any consideration to take a long. I mean, MACD hasn't converged yet while stochastic is swinging up and we're over 30 on the RSI. Those are favorable signs. It's still kind of a risk. I mean, no, it's not kind of a risk. It's an absolute risk. There's no reason to consider taking that trade. So again, me personally, I would much rather wait for a better opportunity than to force one right now. Once more, I'm just trying to talk to the handful of traders that are, on the edge right now, just ready to click that buy button or that reverse button. Whatever it is you do, just make sure you do it carefully and work within your risk tolerance. Because my risk tolerance, I don't like to have any kind of risk like this. This just makes no sense. In fact, we took a long at 60,000. I had to close it early once we lost confirmation, or basically the trade became invalidated once we hit that 58K mark. Close that out early. Super glad I did. We'd be totally in the red and we're liquidated. But again, you got to take those kind of calls sometimes. You got to make those kind of calls in order to survive these kind of markets. Right? I'd much rather lose less now and close the trade than to have potentially risked it all and then made a bunch on the back end. It just doesn't make a ton of sense. You rarely win in that sense. All right, so last thing but not least here, go ahead and take a look at the hourly. Believe it or not, the Ichimoku cloud is getting closer. So again, a closure here at about 55K or higher would be a substantial step in the right direction. I think it's too premature to presume that's going to happen here. And if we take a look at the volume, obviously there's a significant amount of volume here, and that's a good sign. Okay, so if the volume can continue, then I think we're going to have a good chance at retesting some of these more recent lows, which is roughly that 58 to 60K mark. Other thing I forgot to mention too, and I sent this out on our Twitter, Telegram, and Discord, is we have a significant gap on CME futures. The previous one has already been filled. That's this green box here. But if you look at this here on the right, 59.4 to 62.5, that's the new CME gap. Okay. So it's important to recognize that those things commonly get filled. We talked about this for the last 2 or 3 weeks, that 60,000 is a distinct probability we're going to hit that level. Now again, it took a massive fundamental catalyst for that to happen, and it absolutely overreacted. But now that we're here, there's a distinct probability we're going to see 59 to 60K or 63K as a rough estimate in the relative near future. So make sure you check that out, or just be aware of that. It's an important thing to understand. If we do take a look at Bitcoin dominance, kind of hanging out at 57, 58%. As this continues to increase, the altcoin market is going to continue to decrease, right? So you got to keep in mind there's a lot of, it's a pretty messy market right now, and the best practice is generally just to avoid it or to not touch it with a 10-foot pole. You may have or may have not heard that term before. Anyways, regardless of stupid things that I say, the truth here is that no trade is a good trade right now. That's just my personal opinion, and I'm going to go ahead and wait for things to kind of stabilize and relax before I take a trade personally. So to my community, I'm sorry, you're not going to see a ton of signals this week. It's just kind of the way that it goes. We just kind of got to relax and don't do anything kind of too risky, if you will. Okay. The best thing you can do right now, my best advice would be to set some limit orders at on your spot bag. Me personally, I generally do every 500. So for example, it's at 55K right now as a round number. I would do 55,000, 54.5, 54 even, 53.5. That's just the best thing to do if you're not quite sure where you want to get in and the price is running like it is. And as you set your limit orders lower, have the dollar amount become higher as it goes down. Okay. Again, it's easy to say. Half the time when you do that, the price never even comes back down. So I know it's frustrating, but I would say, me personally, just in the big picture, I still personally believe Bitcoin will be extremely high value in the next 10, 20, 30 years. So, I'm planning to retire here in a while. I'm going to leave my spot bag alone. I'm going to continue to add to my position in the 50K range because I think this will be a thing of the past and we won't see this again for quite some time. But Again, that's just me personally. I hope that you found benefit today. Okay, sorry, I talked way too much. Thanks again for watching. Hope you all have a great rest of the day. We'll look forward to seeing the next one. Have a good one. Take care.